All right, hello everyone. Happy Monday. It is a new week of trading. I'm here with Derrick Oldensmith. I'm Greta Wall, your host. Derrick is the leader of T3 Live's ProDesk virtual trading floor and a professional prop trader with T3 Trading Group. Derrick, happy Monday. How's the start of your week going so far?
Okay, I'm down a little bit today, but mainly from some swing positions that I have on, which happens sometimes. It's part of the nature of swinging positions. But things are going well. So hello from Tucson, Arizona, which is where I am for the week.
All right, so Derrick's in Tucson, a testament to the fact that you can trade anywhere. This is a career that gives you some flexibility, but of course, he is locked in on trading while he's in Tucson this week. Let's take a quick look at Derrick's current positions. Again, he is a professional prop trader with T3 Trading Group. These are the positions he's currently holding: long, short, and ones he's gone flat on so far for the day as of 12:30 Eastern. All right, our topic for today, Derrick, is Tesla's Robotaxi a flop? So we, of course, Tesla had their big Robotaxi event last Thursday. It was a late event for those on the East Coast. It was like a 10:30 event on the East Coast, 7:30 on the West. The stock was really crazy during the event in those after-hour sessions, but then gave up all of the gains, went negative, and then was negative in the session on Friday. Today, pretty flat. What do you think about the response to Tesla's announcement and what the market was looking for and obviously did not get from Tesla?
Sure. So social media, from what I've seen, says that the event was a success, but the market, which is what I care more about, says that the event was a flop.
Right.
I'm short Tesla. I've been short Tesla. Earlier in the month, we had a miss on their car sales number that hit the stock down. It broke it lower. So this stock, it just has not been trading well. I think that they bought it up to some degree in anticipation of the event, and then the event was mildly disappointing. So they gapped that thing down really big on Friday. I use that as an opportunity to cover a majority of my short position that I have, just because the stock then was pretty extended to the downside. Really, 220 had been my target. So I covered, the majority of my position into a really big down move into that level. I'm holding a little bit of a runner at this point, but if they can bounce this thing back up a little bit because it's oversold, I'll actually use that as an opportunity to re-enter into the short. That same bounce back idea, I know some of the traders on my team bought the stock today, kind of back through yesterday's low to take advantage of that bounce back in the same way, because my trade's a little bit bigger time frame, a little bit bigger picture, in the same way that I'll be looking to add back short on any sort of bounce back in this stock.
Do you want to pull up the Tesla chart and kind of tell us, like, you can show us the chart and what you're looking at as a trader when it comes to Tesla, where we're currently at?
Sure, happy to do so.
Well, the charts are up, so whenever you want to.
All right, let's take a look at Tesla on this one. Pop over the daily chart. So this Tesla swing has actually been an interesting one for me, because I'm actually in this thing back all the way from September 18th, which makes it look like I probably endured a lot of pain in this move from 230 up to 265. I really didn't. Initially, I had shorted this thing back on the 18th. That closed, really poorly. It closed on lows. But then the next day, the whole market kind of broke higher. Tesla broke higher. And I actually, even though I was still short, communicated to the team that this is a long through 235. So that was a great long. And then there was another great long on the 23rd on the inside day and up, which we had also communicated as a long through 244. So there were two wonderful opportunities to buy Tesla to the long side. For me, I was short, but I was short such a small position after booking a lot of profit that I managed to actually be able to hold a pretty small Tesla short throughout the entirety of this up move. Every time it got a little bit extended to the upside on an intraday basis, which was oftentimes in the mornings, I would come in and day trade it real quick, heavily to the short side, put some money in my pocket, and that almost kind of further funded holding my smaller short that continued to move against me, like $35. Then as the Robotaxi event was coming closer and the stock was pretty extended into that event, the way that I view extension is just where a stock is trading versus a space between the 8 and 21 EMA. The 8 EMA is my blue line. The red EMA is my 21. So this stock hadn't even touched the 80 EMA throughout the entirety of this period since it broke out from the 235 level that I had just mentioned. So I was able to kind of size back up a bit. Then they had the car sales number, which was a disappointment, broke the stock lower. That was great. It started to pay me. I was a little bit more aggressive again, built out this wedge pattern here between October 2nd and October 9th, more or less, with 240 being the support level. It was a little bit of a declining wedge after a break lower on that car number. So I would view this as like a neutral to bearish pattern. Neutral really because it is within a broader consolidation and still above that major 235 support zone, but neutral to bearish because it's really like a descending channel here, descending triangle here. So that means that sellers are getting a little bit more aggressive while buyers are trying to hold that 240 support zone. And then it attempted to break lower this day right in front of the Robotaxi event. And then finally, when the event actually happened, that old trader saying that we've known for a long time of buy the rumor, sell the news is actually what occurred here. They bought it up into it. They sold it off after it. Even best case scenario, a lot of the stuff that Elon is talking about is I think a 2027 story. And we know that Elon is notoriously terrible at following through on any dates that he sets for any new products or anything else. So
when it comes to the break lower on the stock following the event, you can see, of course, the big candle way lower there, the last two candles. If we stay in this zone, do you think it gives Tesla a different setup for earnings in 10 days than we would have gotten if the We Robot event had been a catalyst for a move higher?
So earnings are always really hard to say because while I am a believer that news tends to move in the direction of the technicals, I also always say that there's nothing that can change a technical picture on a stock faster than an earnings report. So, next thing you know, there's a really big miss or a really big beat, and maybe the stock is trading at $170 or something, and there's no technicals to the left, or maybe the stock is trading at $280 and there's no technicals to the left, and we kind of have to reassess the picture and let it build out. Obviously, those are extreme upside downside examples, but you get the point. So for now, it's just a matter of between now and the earnings report, how does it now settle this downside extension? The same way that I was mentioning the upside extension at the end of September, we now have downside extension. Stock was trading at 215 today with the 80 AMA up at 234. So that's $19 of downside extension at lows today. So that's exactly why some of the traders in the team that I work with were looking long this thing today. And I mentioned it as well as a possible bounce back opportunity. This thing could easily bounce back to the upper 220s, 230, low 230s, that kind of area. And that's the zone that I would want to see if a lower high comes in, which is something that I would like to take advantage of to kind of reestablish and reshort a lot of what I covered in this thing. Whereas, like I was just saying, the traders who are long, they're just looking to take advantage of that oversold nature of the stock. But the thing about trading counter to the move, about trying to be long right now, is that time is your enemy. The more time that goes by, the more time that this thing spends down at 220, the faster this 80 EMA and 21 EMA are going to catch up, and the lower the reward profile becomes of that bounce trade. And the more aggressive I also would have to be if I want to reshort the stock at those levels.
All right. So when it comes to earnings, Q3 earnings are picking up this week. We got the de facto start of earnings with big banks on Friday. JP Morgan. Who else reported on Friday? Do you remember? I don't remember, but I know Chase. And then I know Bank of America and Goldman Sachs are coming up tomorrow. Morgan Stanley sometime this week as well. Anyway, so we're starting to get into the swing of earnings. The response to, I know, JP Morgan's earnings was good from the street. They rose for the first time in, I think, 4 earnings reports or 5 earnings reports. What do you feel about the financial sector? Because that's, the earnings we're in the heat of right now. And these current earnings reports we're coming into, of course, rate cuts are starting, things are going to change for the banks in how their business is done and how their profits are done, et cetera, because of, or how their profits look because of the change in interest rates. So what do you think about the financials here into this earnings season?
Sure. So I have not analyzed or looked at all the bank earnings reports that occurred on Friday. I was out on Thursday and Friday because I was at the Traders for a Cause event where I was a speaker in Las Vegas, and it was a wonderful event for charity. Definitely will recommend everyone that I work with try to check that out next year if they're able to make it. So I haven't really dissected the numbers yet, but the charts look great. I had been mentioning the importance of XLF 4550 to get above. So we broke out above that last week, and then Friday just gave real further continuation of the XLF breakout off of what appear to be some pretty solid earnings reports from JP Morgan and the other ones that reported, at least based on the charts. They all traded up pretty decently.
Yeah. For you, for this earnings season, is there anything different about Q3 earnings than there was for Q2 when it comes to the market overall and what the market might be looking for?
Sure. So the market's breaking out and is giving a big move, but it's just digested the entire summer. So, like, one of the things that I always try to assess when we go into an earnings report is, did the market just have a really big move into the earnings season in one direction or the other? Because I tend to find that when you have like a really big up move into into earnings season, that it becomes much more easy for stocks to disappoint and trade lower. And the opposite's also true when you have bigger down moves into earnings season. It just becomes a little easier for the stocks to be able to move higher if they can surprise just by a little bit to the upside. This is an interesting one because, yeah, we are trading at all-time highs in the S&P right now, but we basically just spent the last 3 months digesting. So we're at highs. Normally, I would say that maybe sets us up for some degree of disappointment, but we only just broke out after 3 months of digestion. So I don't think that things are dramatic here. So I'm going into this one, I guess, with a little bit more of a neutral mindset, and we'll see how it plays out, especially as we begin to see the bigger Mag 7 names start to report.
Yeah. All right. So Derrick, I know you do a large chunk of research every single day for the Pro Desk and for yourself when it comes to trading. So give me your top 3 setups of the week that you're looking at personally, and you can show on charts and what you're looking at, et cetera, for each of those setups.
Cool. Well, you got me on an interesting day because
yeah.
After sleeping 2.5 hours on Saturday night, I got into Tucson really, really late last night, and I'm a little bit behind on pretty much everything. But the first thing I noticed when I was doing the morning meeting for the team today, honestly, is how solid a lot of these Mag 7 charts look. SPYs just broke out. The Qs are really only breaking out today, assuming that they're able to hold above like this 494.50 today. And then, looking at Apple above 229.50 looked really, really solid for a breakout for some sort of, a bullish consolidation pattern that it had been in. We're trading above that level right now. Microsoft looked a little bit interesting if it can get above 420. It's attempting to do that today. Google looks really interesting if it can be above 165. It's trading right at that level right now as we're talking. So there's some interesting setups with these Mag 7 names. With all that said, and the market's at highs, I have to repeat the same things that I've been saying for the last couple of weeks. And maybe this has caused me to miss out on some profits, which is fine if that's true. I feel as a trader I need to capture every single move in the market, especially when I have a lower confidence level. I'm still nervous about the second half of October, especially when we get through options expiration and expiration as we approach the election. I don't like how elevated the VIX has been trading. I know it's come back down a good bit today, but it's just very bizarre to see a VIX trading at $21, $22 with the S&P at all-time highs and basically moving sideways, which is what was happening until we started to break out at the end of last week. So I'm still a little bit nervous. I think that there is some risk to the downside, but like I've been saying ever since I've been giving this warning, which started a couple of weeks ago, when the risk is to the downside, you still need something to actually trigger that. So if there's no trigger that comes into the market, if there's no, I don't know, economic number, or something that happens that the market really doesn't like, then you can't get that fulfillment to the downside. You never trigger the beginning of what creates a feedback cycle of selling in the marketplace. So I have not been a gung-ho bull on this move, even though we are breaking out to all-time highs. I do have longs on, but I'm also always putting the technicals first. So even though I've been mentally a little bit more bearish over the course of the month of October so far, the technicals have never confirmed it. So since the technicals don't confirm it, I can't really act on it. And that's pretty much where we're at. It's where my head's at with this market.
All right. So are you a bull? Or are you a bear?
I'm very neutral.
You're just neutral.
Yeah,
all
I'm
right.
very neutral right here.
You can be neutral.
Longs on and shorts on, and I'm managing both sides of the market.
Yeah. How is the mindset with that of having being short some, long some? Is you're just more looking at individual names and how that stock is performing individually versus an overall thesis on the market itself?
Sure. So it's a great question. So the way that I approach markets is I like to start with what I call a qualitative fundamental thesis, which is I think for XYZ reasons that the market should be moving up, down, sideways. But then I need the technicals to actually confirm that. So for me, if anything right now, my qualitative thesis is bearish, but then I need the technicals to confirm that. And the technicals are bullish. So now I have two competing things. I have a bearish thought process based on what I view as some of these qualitative fundamentals, but I've got really bullish looking technicals. Between those two things, I always will choose the technicals. I think that the technicals are more important than any thought process that I may have, because the fact of the matter is I'm wrong a lot. I've been wrong many times over the course of my trading career. And that's why technicals are so great, because the technicals tell you that they'll confirm that your thought process is right. They'll tell you how to be able to enter your positions, how to manage risk if your idea is wrong after you've entered it, and how to manage reward to maximize reward after you actually get into that trade. So, for me though, I also will have the most amount of conviction when the technicals in my thought process line up. And since we don't have that right now, I have a thought process that's bearish, but technicals that are bullish. It just means that I don't have a large degree of conviction. If I don't have a large degree of conviction in the market, I shouldn't be putting on a lot of risk. It just doesn't make sense. Markets are opportunity creating mechanisms. I don't feel that I need to capture every single tick and every single move in every stock and every index in order to be successful and make money in this business. I can kind of bide my time a little bit and wait until the stars actually line up for me a little bit more on one side or the other, as either my fundamental thesis evolves, which it will over time. I actually prefer to be bullish. I just haven't been recently. Or the technicals evolve and begin to align a little bit more with the thesis. So I'm just trying to be a little bit patient. That thesis will have me be more ready to put short trades on and short day trades on than I would be otherwise. So, I've got a little bit of a day trade short on NVIDIA right now when I saw the stock begin to break down at about 11 o'clock today. I shorted some. Well, first I shorted some on the way up off the extension. I got stopped out of that trade for a loss. And then I reshorted on the way down just a little bit before 11 o'clock today, also as a day trade when it looked like the stock was breaking lower a little bit. Covered almost all that position, reshorted a little bit into the up move. So I'm definitely a bit more ready to hop in on even just day trading short setups when I see them right now than I would be otherwise. And if I were to get, and it's certainly an if, and it's lower probability, but if I were to get some sort of full-on reversal to the downside in NVIDIA today where it closes on lows, well, then I might keep 10 to 25% of my position as more of like a runner. At that point, when the bigger picture technicals begin to confirm the thesis a little bit more, which currently they're not. So I've been very much in a mindset recently, which is actually usually not how I trade, of doing more day trading and singles and doubles and things like that. I do like to look for big moves on the daily charts. I tell traders all the time, I think one of the keys to making really big profits in trading is to capture big moves on big size. Easier said than done, obviously. Catching big moves is one thing. Having big size with it also is really difficult, because a lot of times it's difficult to be too heavy in a position just because you have to have risk management on that position. So if you can find a good day trading execution, and then at the end of the day, the bigger picture technicals start to line up with that a little bit more, that can be how you capture a bigger move. And because it started as a day trade, chances are the space risk, that's what I call the difference between where you enter the position and where your stop loss is, might be tighter because it's on like a 5 minute, and then maybe you can take a little bit more size on that. But for the moment, while I don't have a ton of conviction, it's been a lot more, singles and doubles, and getting into some day trades and stopping myself out quickly when they're not working, and that's it.
All right. Great. All right. So again, Derrick is a professional prop trader with T3 Trading Group. If you'd like to get his free ebook about prop trading and the benefits, you can go to t3live.com/DOLive to get that download, to learn more about prop and why Derrick and, of course, all the prop traders at T3 Trading Group agree it is the best way to trade. All right, so go to t3live.com/DOLive. Derrick, I'll let you get back to your trading and get caught up on life, as you have been, of course, very busy this weekend. Have a great rest of your trading week, and we'll talk again next Monday.
Thanks, Retta. See you then.